from Indonesia. In this session, we will follow Gema Goeyardi presentation. Gema is the Astronaci of Future Technology founder. He is one of Asosiasi Analis Technical Indonesia member who obtained CFTE and MFTA. His MFTA thesis based on his finding on relation between Mercury retrograde and gold market as a significant bullish trend factor. In this session, Gema will present how to profit $30,000 from gold trading with Sun Capricorn cycle and divergent Fibonacci. Welcome, Gema Goeyardi. You can start your presentation.
All right, please, everyone. Thank you very much for having me. Can you hear my voice, Alan?
Yes, we can. Yes, you're coming through lovely, and we can see your screen. Thank you. Please go ahead.
Great. All right. Okay, let me prepare for this. All right, thank you very much. I am Gema Goeyardi, the founder and CEO of Astronaci International Group. We're based in Los Angeles and also Indonesia. I would like to say thank you for IFTA and friends in Indonesia Association Technical Analysis and also Malaysia Association Technical Analysis to have me in here as your speaker. And today I'm going to share about learn how to make $30,000 in gold trading with Sun and Capricorn cycle. In 2018, I was with you in IFTA conference in Kuala Lumpur. We're talking about the Mercury retrograde cycle for a bullish trend, which is that also my thesis to get my MFTA. And today I'm gonna speak with you. You can see my face over here. But before that, a lot of people asking me, how can you make a lot of money from commodity, Forex trader, trading, right? I'm gonna show you this opportunity. It's really glad to give you some ideas that technical analysis is really work to make a lot of money from the market, okay? I'm not that great at making money. I believe a lot of people in this world even better than me, but at least I can become a very successful testimonials for technical analysis. I'm a trend trader and always try my best to trade with the trend. I never do a counter trend trade. It's really dangerous for me, and most of the time I trade gold and Japanese yen pairs because I love any pairs that give me a lot of trending situation. Okay, so this is my trading account. I trade with MRG Premier based on St. Vincent as well, a direct to liquidity provider. That's why I choose this broker since the past 10 years. December 21st, 2012, that's my first balance on this account. I put $2,000 and I have traded a lot of numbers here, a lot of stop losses. I got multiple losses here as well. Okay, from very little amount of money, just follow the trend, combining my trading style with the astrology cycle to find a very definitive trend direction. And at the end of the day, this is my last trading, October 21st, 2020, just 3 days before this conference. As you can see, the total profit I got is 5.5 million. I add another deposit about $2,400, so it's total like $4,400, and the whole withdrawal was $5 billion. And my latest position now, I'm still struggling with the gold, of course. We are in a Mercury retrograde cycle, and I believe this bullish trend should continue. We're moving in the sideways trend, so I still have like minus 10 grand here. We'll find a way to make this profitable. And the topics that I choose now is because of the Sun Capricorn cycle is upcoming in the next 2 months. So I hope all of you can get a significant amount of money in the next cycle. So even though I cannot make it, let's say I have to cut this loss, then I'll get back on this December, okay? That's why I choose this topic. Hopefully you can get the idea what to do in the next 2 months, and maybe you can get significant lot of money as well. So let's get started. Feel free to shoot me any question. I'm really happy to share with you. Okay. So the idea about the $30,000 is not about one night game. The Sun Capricorn cycle, as you know, that everybody in December, starting from 21st December to 21st of January, you will get a birthday. It means the Sun will travel to the Capricorn, and it works for at least 30 days, right? But statistically, I found that the Sun Capricorn cycle will give you a bullish trend from like the 9 days after the culmination. So let's say the 21st of December, the Sun will be moving in Capricorn cycle, then we're looking for a bullish trend for the next 9 days. So that's a plan, right? So how about the $30,000? It's basically depend. If you trade with one standard contract size or one lot size in gold market, it may not be $30,000, but if you put it like 10 years, 10 cycles of the Sun Capricorn, you may get $30,000. So for me, if the Sun Capricorn comes, normally I will use like 4 to 5 contract size or 5 lot standard. I'm gonna following the trend using the moving averages, the money magnet secret area. That's what I teach all the students, and also the divergence and Fibonacci. So today I'll share you my strategy. Okay, in the next December, I'm gonna trade on this Sun Capricorn cycle with a massive lot. Hopefully I can get at least $100,000 on this cycle in this year 2020 during the pandemic. So maybe this can be a great idea for you. But before that, let me tell you why most traders fail. Okay, because they have like a false expectation. A lot of advertisement portray trading as the way to get rich quick, and maybe driving Ferrari for the next 3 months, but this only happened in the dream world. Just remember, guys, no matter I'm using the financial astrology or you have the sophisticated indicator, maybe you are a Bollinger Band indicators, you're the lover of that indicator. So still, there's no such thing of like a holy grail and 100% success. Okay, and most new traders believe that there is some kind of secret system or holy grail that never loses. Even though I'm using the financial astrology that will help me to identify or determine the trend direction to give me like more confidence, but doesn't mean that I will get like 100% guarantee I'm gonna make money all the time. Okay, so that's a false expectation, and then afraid to accept loss. Okay, let's say since 2018, you know me, and I've been become a speaker in IFTA conference. I'm talking about the Mercury retrograde, provide a bullish trend indication with the 80% probability. Okay, this year is a little bit different. Okay, I got like 500 to 600 pips in the early Mercury retrograde, which is at 14 November, and a week before, 14 October, and a week before 7 October, I got a lot of money on that. But you know, this time the market has become sideways. Then I have opportunity to close my account with a minus $10,000. So what does it mean? I have to accept the loss. If you cannot accept the loss, then you're gonna lose all. So the problem is why most traders fail, not why most traders lost. The failure is when your account burn out. Okay, you got a margin call and everything gone like that. So it's because you are afraid to accept loss. So this is what I always teach my students, to not afraid to accept the loss. Okay, and the third one is the lack of trading plan. That's why this event in the IFTA, this conference, I'm gonna talking more to the trading plan. So let's say you got an information in the Sun Capricorn cycle, you will have a better probability of bullish trend in gold. Okay, then what you have to do. So this is the idea. You have to get a better trading plan, better risk management, and you will always stand up in the highest probability. Okay, the trading fact, remember, trading deals with probability based on the book of Martin Pring book is always saying that technical analysis as well is deal with probabilities, never be a certainty things, right? To win a battle, you always tap on the highest probability trade plan, and making a big money is possible with the proper skill, mentality, and risk management. We're talking about trading now, and I'm gonna give you the key what you need to prepare in the next 2 months. Okay, and my way, my perception is always, since 13 years ago, and back then when I started all this game, the money will always come to you in a big trend. I believe you agree on that, right? Even William Delbert Gann, Elliott, Ralph Nelson Elliott, everybody will talk about the wave tree, which is that the big trend. If you're talking about the Wyckoff theory, we talk about the markup trend. So all of us agree the big trend is the key. But how to identify the big trend and when the big trend will come? That's why I'm using the financial astrology to find out about it. Okay, so number one is following the trend. When the major trend is bullish, we buy on weakness. I'm not going to sell in strength. I mean, in the very strong bullish trend, I'm not doing a counter trend, especially when the sun in Capricorn, the Mercury retrograde comes. There's no way for me to do a counter trade because it's really dangerous for me. And then if you know about the divergence, it's really work on the hidden divergence or the positive divergence. Most of the time when the Sun Capricorn cycle comes, it creates a big trend, then the positive divergence will come. Okay, will show up when the trend is very strong. Then the positive divergence, I found it that it will help you to identify when the trend will be a continuation. In what case, when you see the positive divergence comes, then a continuation trend will more than likely appear. Then use the help of the financial astrology. In this case, it's Sun Capricorn that will happen in 21st December 2020. That will give you a better chance of winning on the gold trade. Okay, just a little review. I believe you're already familiar with this. The bullish divergence and the positive one. Here's the thing. So if you're talking about the positive bullish divergence, we're looking for the lows over here. That will be a higher trough. And the stochastic, I'm using the stochastic slow with the 533 indicator. Sometimes I change that to 933. It's depend on the market volatility. So in the stochastic, that will be a lower trough. So you will get a higher lows on the price or lower lows on the stochastic. In the bearish continuation positive divergence, so I believe you will get a lower peak, right? And this is the one of indication of bearish trend, but the stochastic will be on the higher peaks formation. So this all about a positive divergence. Now, if you get a confirmation from the momentum, now we're looking for Fibonacci retracement. I'm using the external retracement of Fibonacci. You can also say that extension of Fibonacci. There's many ways to say that, but I put a number here, the X, A, Y pattern to define a target price. Okay, so this is the formation X, A, Y. So I believe everybody always see this in any price movement. Let me draw you something. So let's say the price is moving in a bullish trend, 1, 2, 3 move. Then I will put X over here, A over here. We always want to buy in the secondary reaction. Then we're looking for the Y area to sell our asset, right? When you're doing a short selling, you put X here. So let's say this is the initial trend coming down like this. Then the A, you're gonna sell here, waiting for the consolidation to break or any retest. Then it's going down here. I'm sorry for that. Okay, then the X will be your target price. Okay, now sorry, I'm using the Fibonacci external retracement 1.618, 2.24 and 2.618. This is the major key of gold trading. The Y area in gold trading, 80% of the time the gold will have a rejection when it hit 1.618. So it means if gold is really down like this, then you will find the Y area as a rejection. Then it's going up again, no matter it's going down for bearish continuation or another rejection for trend reversal. But as a conclusion, if you're looking for a take profit in gold, I really recommend you to have a Fibonacci external retracement like this with 1.618. Is 80% of the time the price will have a minor rejection or even major rejection on that level. So should the price close below the 1.618 in this area, then you're looking for 2.24 and 2.618. It's just like a multiple layer of support, but this works so well. In the past 13 years, I'm always using this, no matter what kind of astrology is. But if you have the strong trend, for the minor rejection, minor movement, you can use this Fibonacci external retracement number. So now I'm going to introduce you about my money magnet secret. 70% of the time I'm using this when the market is on the markup situation or bullish participation or bearish participation. The key is when the market moves in a trending market, I'm going to use the exponential moving average as the clue of the continuation of the trend. The price must be moving in 45-degree up or down. You can use any trend line by angle, by MetaTrader, or if you are using the investing.com or TradingView, you can always use the trend line by angle over there. So as long as the market maintaining 45-degree up or down, it means the power of the trend is really strong, right? Then I'm gonna use the exponential moving average to visualize the trend. So my strategy is, as long as the price is moving above that moving averages, so we can say that the bullish trend is very strong. Let's say we put a vertical line here, all right? The vertical line is the transition trend. So from a strong consolidation, we can say accumulation, and then breaks out. Now the price is moving above the moving average, making a primary trend, secondary trend, primary trend, secondary trend, all the way above the moving average, exponential. All right. So we can say there's a lot of opportunity. So this EMA that works as a magnet. Okay. No matter how fast and furious the price, just like Elder said in his book. You know, Elder always used a triple screen trading system, and it's pretty much similar with this money magnet. Everybody uses the moving average in so many different ways, but I can see that Elder always see this, that no matter how fast, furious the price goes up like this, it's always back to the demand level, you can say that, like a dynamic support using the EMA, then you have another opportunity to buy. And Astronaci has an approach. Do you know when exactly the time of the trend will become a bullish like this? Then I'm going to use the sun in Capricorn cycle, okay, to give you an idea when exactly the price will be moving above the moving average. So that's the idea. By combining that astrology cycle, and I'm using the money magnet area, I'm waiting for the price to have a new fresh trend, okay? That's what we call a new fresh trend from the consolidation. Maybe this is a bearish trend before, and then you're looking for the EMA crossover. I'm using the 21, 34, and 90 EMA, okay? When it's crossed and the price is moving above the EMA at initial stage of the markup, okay, if you're using the Wyckoff theory, you can combine that as well. So consolidation, breakout, retest. When it's retest over here, it is very clear that the price is retest to the previous old resistance that now flip over become a support. Then the next retest or the next correction, okay, it rejects at EMA area, which is that magnet area. So how I'm using the XAY or the Fibonacci external retracement is to point a target price. In this case, I believe the price will be moving like this, a strong rejection with this little base over here. It gives me like drop, base, and rally movement, okay? And where I have to take the profit. So I believe 1342 as external retracement 1.618 will be the next potential resistance before the price turn back down like this. Let's see what happened. Okay, now if you buy the magnet area, then you will get this. I'm using the daily chart. You can also use the 30 minutes chart or 4-hourly chart, but I recommend you to use the daily or 4-hour for trend identification and entry with a 15-minute to 30 minutes chart using this strategy. So in this case, in the daily chart, one swing like this, right? And this is approaching to the Sun Capricorn cycle. You get 38 points, which is 380 pips. If you are entering with the one lot, it's equal with the $3,800. Okay, this as well. So you got very strong upside movement, retest, and the price is moving above the moving average, even though you got a noise here. But as long as there's no tree crossover from the EMA, then you're looking for another buy, and the Y area will be your take profit point. Okay, let's take a look at the result. Boom. This is like 1700 pips or 179 points. Okay, and same with this, right? If you are looking for the target price, we're still looking for X, A, Y over here, and gold will always 80% of the time will touch that, especially when you have this continuation divergence or positive divergence. That will show you that the trend will be more than likely continuing its higher trough, right? Hopefully you can get the idea from this. Boom, it's another 100 points on this, right? Target done. Now, why do we need astrology? Because there are 4 points over here. I spot 4 points. We are hardly can see the future of price movement. We have no idea when the price will reverse. We want a higher probability in trend analysis. We never knows when the sideways comes. And we're talking about number 1 and number 3, and that could be solved by the Sun Capricorn cycle. We want a higher probability in trend analysis, then we can more confident to jump into the market with the bigger lots. Okay, bigger lots mean bigger money, and better probability, better future visibility, and better winning rate for speculation. That's what I'm talking about now. So the Sun in Capricorn every 21st of December each year. Okay, everyone have a birthday starting from that if you are on the Capricorn zodiac. So statistically, I see that the bullish trend probability is 81% while Sun in Capricorn. This is for my another thesis. Okay, whereas bearish and sideways trend have probability in Sun and Capricorn respectively are 20% and 0%. So it's moving around that. So there's no 100% things, but at least if you got a statistic based on the key-square, I can say that 81% of the time, if you can give like margin, so maybe like 75 to 85% plus minus 5, you will get a bullish trend on this. The results show that bullish trend has a higher probability than both bearish and sideways trend in Sun Capricorn cycle. With this method, we can combine the trend analysis based on the Dahl theory, Wyckoff theory to determine a bullish trend formation at a specific time. So let's take a look at the December 2011 over here. Okay, what do you think, guys? The trend is making peak trough, lower peak, lower trough, and so on. What do you think? I want you to join me. Okay. Okay, let's talk about this. I want you to join me. Where is the next direction of this? The blue one or the yellow one? Bull or bear in this case? Just type on the chat, guys. Just feel free. Okay. Blue, bear, 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 bear. Okay, good, bear. Everybody choose for bear, yeah, because of the technical analysis is showing a bear. Feel free, just feel free to shoot me an answer. Okay, I read blue, bear, bear. Okay, most of the time people will say bear, I think. Technically, it's become a bear. I agree with that. Great, okay, nice. Thank you for participating. So let's see what happened then, right? Okay, get ready, boom. You will get a bullish here. It's so amazing, isn't it? Yeah, technically it's a yellow, but this is what happened. It is what it is. Why bull? That's why, right? It's confusing. So if you're using the technical analysis, you'll get a cut loss over there. And finally, you will see, oh, there's a double bottom with the divergence. But if you know that this is the Sun in Capricorn, you'll already be very ready to buy when other people sell. Okay, let's take a look at another example. I really have Aizul Azhar is starting confusing on this, right? Wow. All right, so let's take a look in this case. All right, don't take into an account about the Sun and Capricorn. Let's talk about the basic technical analysis just on that price action. Which direction, guys? Yellow or green? Sorry, yellow or blue, of course. Yeah, yellow, yellow, yellow. Okay, yellow, technical bear. Yeah, that's true. Price is moving below the EMA, breaks multiple lows. Yeah, I agree with you. Nice. Okay, and you are not the technical analysis comparing to the financial astrology. If you combine that, you will get this. I know this is bear, but if you can see, the price is not directly down. It's making like a strong rebound, even 2 times. So if you sell at that point, your account get burned, okay? Even though that continued downtrend, but within this period, it's become sideways to up. So what does it mean when we say that Sun Capricorn is moving on the bullish? It means the period of the starting point closing price will be lower than the end of the period closing price. At the end of the cycle, the price should be closing higher than the opening, okay? Now, let's do it again. 2013 is very, very, very strong bearish. It's very clear. But what happened next? Boom. It's bull. It's another 490 pips point. Okay, let's take a look one more time. It's over here. If you plan to sell it, right, you will get this. Your account just burned. In this case, I don't see anything to show that there will be a very strong bullish indication at this point, exactly on the 21st December 2013. But you can see, even though there is a bullish divergence, it's not that obvious before the price moving above the EMA, right? It's very clear on that. And the 2014, you got a very sideways momentum, even though this is a higher trough. It could be down. There's no indication of very clear trend reversal in this part, right? But you have very strong bullish, almost 1,000 pips. Can you imagine that? If you have a sell position, what's gonna happen with your account without a stop loss? You'll lose everything. Okay. 2015, it's same. It's making a double bottom maybe. Yep. Then the double bottom will bring the price going up. It's pretty clear on this. People will see, if you learn about the chart pattern, you may see, okay, there's a multiple divergence over here, and then the price trying to accost it and make a retest on the previous low. Then it creates a double bottom momentum, double bottom pattern. Then it's likely it's going up together with the Sun and Capricorn. It's pretty clear on this. And how about 2016, guys? It's very clear that the price is moving below that EMA. Okay, there's no way. It's just a little divergence, right? Okay. This is Liem. How about the bigger picture, like primary, secondary, short term? We're talking about the daily chart now, because the daily chart is the standard time frame that you want to use, right? And we're not talking about like a bigger time frame. We're talking about the specific date, like 21st December plus 9 or 10 days, what's gonna happen with the market? Even though that's just a secondary reaction, like here, like lower trough to lower peak. Let's say this period is planet ABC cycle, okay? At least you will have a strong bullish trend. You're not gonna sell on this. In this case, let's take a look. Boom, there's another 680 points. That's what you get, okay? All right, 2017, it's same, boom, going up. 2018, it's a hard time. That's another continuation. It's almost 200 points, all right? Yeah, the chart is only showing 3-month trend. To me, is too short. I'm doing the research. 81% is not for like three or 4 years. This is what we are talking about, like since 1974, since the gold, the first trade day of gold. So you want to take a look to your data, use the Sun Capricorn cycle and take a look from 1974, and you can do by your own calculation. I think you don't get the idea, but let me clarify to you. I don't care about the multiple time frame. I don't care about the primary or secondary or the cycle, but I want you to know 21st December plus 9 days, you have 81% probability for gold to be closing higher than the opening period. That's it. If that closing higher 1,000 pips and you are selling the gold, you're gonna burn your account. All right, that's the point. 2019, the same. If you can see here, it's a multiple sideways movement over here. Okay, if you learn about the Elliott wave, you know that if the price is moving downtrend like this and overlapping each other, it means from the peak point over here to the lower trough is a correction wave, because it's keeping overlapping each other. Then at the end of that overlapping wave, based on the Elliott wave, together coincidentally with the Sun and Capricorn, that turns the price to become another impulsive wave rally. Okay, that's when we talk about that impulsive or correction. Okay, when that 20% bearish part ever happen, I'm not really sure about that. This could be when another like malefic planets that against that Sun and Capricorn happens, but I don't really care about that. If we know that there's a one time of Sun Capricorn failure, let's say 2019, let's say 2019 is failure, okay? If we have 81%, then there's a more than likely the next cycle will be another bullish trend, okay? Okay, if you talk about 9 days, mean 9 bar daily. We're talking about the trading days, the 9 trading days. Okay, let me give you some example. Gold trend 2004 to 2006. We got a bearish trend in 2005. Okay, and this is one for the example. If you have a bearish trend in any year, let's say 2005, you got a bearish trend, then we can expect the next 2006 will be a bullish trend. Why? Because you have 80%. If you are if you drag up for 10 years, okay, you're using 10 years, and within that 10 years, there will be 2 imposters. If you're playing the game Among Us, you know that there is an imposter. So you got 2 imposter within that 10 years, 2 bearish from 10 years bullish. So it means if you got 1 bear, there's a high probability the next year will be a bull. There will be very little chance for bearish in 2 rows for 2 years consecutively. Okay. All right. Let's take a look to another 2007. You got 2007, 2009. You will have here 2008. 2008 December, you will have bearish over here. Okay, but 2009 is going up, 2007 is going up. So if you have 1 bearish, the next year will be a bullish. Just remember about that. Now 2010 and 2012 is same, it's giving you a bullish. Okay, 2013 to 2015 all bullish. 2015 to 2017 all bullish. 2018 to 2019. Okay, so 81% bull of the 16 cycles. You want to try by yourself. Now I will give you the study case, how much money that we can get from this trading. Okay, assuming I only take 60% of the opportunity made by the Sun Capricorn cycle. So I'm using the 30 minutes chart. So as you can see here, there are a lot of opportunity in the 30 minutes chart. That's why I told you before, if you are looking for the trend analysis using the 4-hourly chart or a daily chart, then when you enter the market, you want to use the EMA, the money magnet secret, and the divergence in 30 minutes chart or 1-hour chart. In this case, I will enter in the rejection magnet area here, rejection here. This is primary trend. Let me change that to a pen. This is the primary trend, right? Why I enter here? Because I believe there's a small rejection with the doji. Okay, then the moving average already flipped over. So I enter here. Then secondary reaction, hit the magnet, 1 engulfing candle. I'm gonna buy this. Okay, then the XIY is here. There's a Harami inside bar. I'm gonna buy it again. The price rejects the EMA. The price rejects the EMA. So this is the period of starting point. This is the period of ending point. All right. So this is all the Sun and Capricorn. I got total about 121 points. And how do you know the price is not going down like that? Because the Sun in Capricorn cycle. That's why it's like an insurance for me to make sure that I can buy following the trend within that period. 80% of the time I'm gonna be correct, and 20% of the time I have to cut my loss. Okay, and this is 2015. I got 1, 2, 3, 4, 5, 6. I got 6 items here. I cannot. Okay, yeah, this is the starting point and this is the end of the point. Even though after that Sun Capricorn cycle, the bullish sometimes will remain strong, especially in like this year. This could be strong. We are near to the USA election. I'm not sure what's gonna happen next, but it's more than likely that this December 2020 will be another bullish trend. Okay, this is 2015, 2016. A lot of rejection. I cannot mention and explain one by one, guys. So limited time, but you can see the pattern is always same. The price break I'm capturing for the fresh trend. This is the old trend, previous trend. As you can see, the price is moving below the EMA until it's crossover, the flip over EMA, and the price going up like this, and then rejection touch the EMA, it's going up, and so on and so on. So this is 112 point equal with 1,100 pips. Okay, 2017 is also same. This really amazing. Can you see this? It's going up significantly, not even back to the EMA 21. Maybe we have to put like EMA 13 if we can use that, because the 13 will represent like a more than 45-degree up. Okay, then the whole Sun and Capricorn in 2017 give me several entries, like 4 buy entries with a total 112 points. 2018 give me about 5 points entry within the period. Okay, because this is like the whole scenarios, like 9 to 10 days, right? 2019 is a little bit tricky over here, but still give you 200 points. Okay. Now, the recapitulation, assuming I only take 60% opportunities taken, what does it mean? Let's take a look. In this December 2019, okay, this is the starting point over here. There are a lot of opportunity that I miss it. Just imagine you're busy, you're not in the mood, and you skip this, you only get like 40% of the time. The rest of the Sun Capricorn cycle, it still give you at least 200 points. So I will close this out, close this out, close this out. I'm not putting that into my recapitulation, just assuming to give you a discount is only 60% opportunities taken. From 2014 to 2019, if you put a 1 lot, this is your average number. If you put 4 lots, you will get $34,000 since 2014 to 2019 averagely every year. So if I have like pretty much bigger capital, like 50 grand, so I'm gonna put like 4 to 5 lots, because I always use the comparison. If you want to enter like 1 lot, the best capital for you is $10,000. If you're using like 5 lots, the best capital for you will be like $15,000. Okay, so hopefully that's give you a better idea on this. I'm really glad to share this with you. You can go to our website theastronaci.com or Instagram, or you can see me in YouTube. Recently we have a special program named the Billionaire Challenge. I challenged myself to turn my account from $50,000 into $500,000. Before I close this session, let me show you. Yeah, it's reasonable. It's depend on you, right? This is my small account. Let me show you. This is the same strategy I'm using. I'm using the money magnet strategy. This is September 7, 2020. Okay, deposit about $50,000. I got some losses here, and now it's $132,000. I got more than 100%. I still have like minus $5,000. So I documented every trading on this account on my Billionaire Challenge. Right, you will see this. If you go to the YouTube, Billionaire Challenge, Astronaci. Yep. So this is the Billionaire Challenge, all made in English. So I believe everybody can easily understand about this. So this is the first episode. I will share about how I made losses and how I made profits. Everything is here. Okay, so I invite you to come and watch this. Hopefully you can enjoy all my analysis, my trading setup, my failures, everything. Okay, so that's it, guys. That's what I can share to you this year. Hopefully you're happy with this. Please shoot me a question. I will be more happy to answer you.
Okay, Gema, there's some question here.
Yep.
The first one is, what's the correlation between the astrology and human psychology so that it can determine where it will be bull or bear?
All right. That's a good question. You can find a better reference in the Google. A lot of thesis, dissertation, journal talking about that. But for now, I just give you a little clue. Sun is the key of the time, and we got several seasons in this earth because of the sun. So every season will give you and will give each season, right? Like a winter, summer will give you different market characteristic. Let's say you're talking about the commodity, you're talking about the oil or palm plantation, the palm oil, that the price will follow all the season because all the business change, right, within the cycle. And then the market is driven by the human psychology. Our brain has a connection with the frequency of the planetary. You want to do a research on that. Then how the planetary can time the market, because basically this is like indirect relationship between the market and the planetary cycle. It's talk about the human behavior. Okay, so that's the idea. When the people getting more optimistic, then we know that they more than likely buying and buying and buying at a higher price. If they become like more pessimistic, they want to sell and sell, then the financial astrology will determine what is the time of that psychological situation. All right, hopefully that's explained. Other than that, you can Googling and find out more about that correlation.
Okay, and this another one. Does the sun cycle apply to Indonesia Composite Index as well?
Oh yeah. Astronaci born in 2009. I'm using Jakarta Composite Index to time the market. You can find the Google. You can find on our YouTube. Okay, let me share you a little bit here. This is during the pandemic. I made a video 7 months ago. As you can see here, this is a different cycle. This is my chart. I try to predict when this JCI may have a rebound. Okay, and this is very, yeah, this is very strong bearish movement, and then I call the 20 or 24 March 2020 will be a bottom because the Venus and Neptune aspect cycle. Then you can see the fact. Let me show you. This is another game, guys. This is very specific turning point date. Okay, this is Jakarta Composite Index from Indonesia. Okay, let's take a look here. This is 24 March after very massive bearish trend. Exactly 24 March is the bottoming and then turn up like hell. And until now, the price never come back to the 24 March low. Okay, so that's the idea. How can I do a prediction in this case? It means yes, the financial astrology does really work in Indonesia market.
Okay. Another one, if the stochastic 533 shown the divergence, but if we switch to 933, the stochastic don't show the divergence. How do we take the decision?
Very good question. Okay, now you have to know how to adjust the stochastic. You don't want to change the stochastic to a very big number, let's say 1433. What's the point? You have to know there are 3 methods to adjust the stochastic. So let's say you're using any stochastic, you have to look, is that crossover, the crossover of the momentum, the stochastic, will be more than likely maximum 2 bars on the reversal. If this reversal is way more than 2 bars, then your stochastic setting is not really good. In this case, let's say I'm using the 533, all right? I think the 533 is the fastest that we can get. And during this fast stochastic, you will see the crossover is pretty much near to the actual price reversal. And also, if you want to set stochastic adjustment, okay, you have to see the turning point should be in the overbought or oversold area. If you put like 855, you can do this as well in the stochastic RSI. You can see that this is too lag. I don't like this, right? So every market, every time frame has a different volatility. So you have to set the rate of change of the indicator of the oscillators. That's the answer. So for now, let's use the 533. If the market become more volatile, you want to make a little bit like heavier stochastic, you can put 933. Maybe that works. So you have to check that on the previous cycles. Maybe if you're using the 4-hour chart, you want to take a look in okay, let's take a look. If I'm using the 4-hourly chart, this is the turning point, like from bearish to bullish. So I'm using the new fresh trend. I'm trying to matching all the turning point with the crossover of the stochastic. Hopefully that's clear.
Okay.
Are you there?
Yeah.
Yeah. Okay.
Yeah. I'm just searching for another question because there's some question here still. About book, what do you recommend for studying financial astrology?
Okay, there are a lot of financial astrology resources. You can use Larry Pesavento books. Yeah, I think Larry Pesavento have a lot of great books about the financial astrology, but astrology has a different approach. That's why we create our certification program. We call that the CAT, Chartered Astrology Trader, for 1 year. There will be 3 levels, and you will learn about the price action, the level 1, level 2. You're talking about all the time, because time is not only astrology. We are using the geometric time cycle as well, and you learn about the valuation modeling in that program. But if you're looking for the books, you can go for Larry Pesavento books. There are a lot of great books from him to give you better understanding about the basic of financial astrology.
Okay, thank you. Well, we have still have time here. Then maybe another question.
Yeah, maybe 2-3 question works. I think.
Okay.
Yeah, we've still got time, Gideon.
Okay.
Another 13 minutes if you want them.
Okay.
Okay. This one is about divergence. You
Yeah.
use stochastic can by using stochastic can we detect divergence with RSI 14 or MACD? I mean, he means not using stochastic, but using the RSI or MACD.
Yeah, I got it. I got the point. For now, it's easier for me to use stochastic, but if you can fine tuning the RSI and the stochastic, that would be great. But normally, I'm using the stochastic for capturing the very extreme level of turning point. I'm using RSI 8 that will give you a very clear turning point possible. Okay. But if you're using this method, the money magnet, you can use the stochastic. That's easier for you. But if you love to use the MACD, it's fine too. Okay, MACD has a different approach of the divergence, but you can always use that, especially the histogram of MACD. That works very well as well.
Okay. Besides you are using MetaTrader, right?
Yes.
But what software you are using to check on astrology?
Yeah, I'm using the timing solution. I'm using the market analyst, but most of the time I'm using the manual check, of course, right? Let's say I pick 3 or 4 markets that I love, then if you're talking about looking for the correlation, I'm using the statistics software. I just put it there. I have a guy who can calculate all of that to find the correlation, the significance numbers of that. But most of the time, I just do a manual, put the period of that cycles, and I want to see manually, like visually, should be very clear on the chart.
Okay. Back and sun. Bullish 9 days after Capricorn means 9-bar daily chart of D plus from 21st December. Is it correct?
Yes. Yeah, from 21st December plus 9 trading days. That's how I found out about that bullish period. There are a lot of beautiful questions over here. Can I help you to choose the question?
Okay, please.
Yeah.
We have time.
Like Roy Williams, have you ever studied Delta Phenomena by Jim Sloman and Wells Wilder? Yeah, I read about it, and that's amazing. And I still try. I need time to try to put their ideas into my strategy, because every strategy is that talking about the trend, okay? And we try to capture the trend. Like Tom Dermark, he has a very good time calculation as well. I will try to find the way to combine everything, because what I need is I have to always jump into the right time and the right trend. That's what I'm looking for now. So if you guys has any idea how to improve my system, how to improve Astronaci to become the better trading system, let me know. I want to explore more and improve Astronaci, because everything Astronaci, I found it now, and that's all for you guys. Okay, so what do you have that, Mr. Gideon?
Yeah. Yeah, there are actually still more questions here. But
Yeah, I got Dr. Suresh here. It
Yeah,
is
please.
as good as buying at wave 2 or 4 EWP, why only Capricorn? Actually, if you can find, I assuming Goog is Google, right? If you can find the correlation between that Capricorn and Google, you can always find at wave 2 and wave 4, and that's a very beautiful. We also use the Elliott wave. We're using the end of wave C or end of wave 5 trading to capture the reversal. Okay, the easiest way to use the Elliott wave if you are using the wave 2 and wave 4. I've been studying and using Elliott wave since 2009. It's already like, I think, more than 10 years now. So that's my summary. If you're using that wave 2, end of the wave 2 and end of the wave 5, there's a better probability for you to win the market.
Okay. Maybe this one is the last question
Okay, yeah.
from Jensen Simanulang. Have you ever think of making a bot using your proven algorithm, Fibonacci, financial astrology, and plus probability, or enhancing the precision using state-of-the-art artificial intelligence to increase the chance of winning?
Oh, is that means that he expect me to put this on the algorithm and AI?
Yeah, yeah.
I
It's
really love to, guys.
making a
If
bot.
you can, yeah, if you can guide me on that, I'm really very happy and I'm really thankful for that because I have no idea how to do all the algorithm and AI. I'm not that technology man like that, but I'm willing to learn. Just guide me. I'm gonna do that, and maybe in the next conference, if Tao will invite me, we're gonna talk about another price action or whatever you want. Okay. I'm really happy. I'm really open to have any feedbacks, and we always want to improve Astronaci for you. And thank you very much.
Okay. Thank you, Gema.
Thank you very much, IFTA.
Thank
Thank
you.
you. That's
Thank you
really
for
great.
fascination.
Hopefully,
Present.
everything is great, and you can connect me. Visit me on Instagram. Okay. Last but not least, let me give you my Instagram, and you already see my YouTube, right? Okay. And okay, I got two Instagram. I think this is the better. Gema, the billionaire. Hopefully I can become a billionaire soon. Just follow me here. Shoot me a message. If I have time to open my Instagram, I'll reply to you directly. And then our new website for the international version, theastronaci.com, and soon we have the money magnet workshop. You can just visit us. This is theastronaci.com if you want to learn. People from around the world, they already come to Bali last week. Come together, we have a trader scam. Okay, just visit theastronaci.com. You will see us here. I have the money magnet trading course that can help you, give you some idea how to win the battle. All right, just visit us. Thank you very much for the opportunity. Hope we can see you in the next IFTA conference 2021. Thank you very much.
Thank you, Gema. It's very encouraging for us to trade. You
Thank you,
show
sir.
us how to combine planetary cycle with technical analysis. Thank you. Well, the next session is the last session of Asia Pacific presentations, the Power Hour of Asosiasi Analis Technical Indonesia. There are 7 Indonesia technical analysts who will present 6 topics in developing indicator signal. And the first speaker is Muhammad Alfatih, CFTE. He is a vice president of PT Samuel Securitas Indonesia and also co-founder of Asosiasi Analis Technical Indonesia. He will present tweaking indicator for better result. Mr. Alfatih, are you ready? Okay, maybe, okay, please go on.
Okay. Thank you for the introduction and thank you for IFTA for this precious opportunity. So my presentation this year is my third time to be a speaker in IFTA conference. And I hope that my presentation today will give benefit for all of us. What I want to share this time is how technical as these people, some of them are my fellow Indonesian member, ATI member, tweaks indicator. Some tweaks its formula to improve its appearance to make simpler, or some tweaks the formula, some improving the appearance. But all try to get a better result for trading and investing. Okay. So yeah. So I start with MACD, MACD, moving average convergence divergence. Yeah, one of the most popular indicator that we all know. Yeah, from Mr. Gerard Echo in the 70s. Yeah. Okay. So actually, MACD is derives from difference between two other indicators, the exponential moving average 26 and exponential moving average 12. Yeah, and the difference between these two moving average become MACD, and then the MACD line. We add moving average, another moving average, the exponential moving average 9 to the MACD, and become MACD signal line. And then another indicator are created, which is MACD histogram, difference between MACD and its signal lines. Yeah. So this is showing us that tweaking indicators has been a long time ago and start a long time ago and still continuing in this era. Yeah. So we tweak indicator from one indicator or several indicators that become a new indicators, and uh, to help us to get more information, yeah, about the market and help us to make an easier trading.
Mohammed, sorry to interrupt, but could you remove the or minimize the zoom controls from your window? We can't see the slide.
Yes.
Clearly.
Okay, wait a moment. Okay. Every time someone put chat, then okay, I stop share first.
Maybe just close the chat down in the yeah. Maybe if you share, when you share the screen, share the presentation itself rather than your screen. You should get that option when you click share.
Okay, is it better?
No, we're still seeing them now. That's better. And there's a little black box at the bottom. Was that the camera one maybe?
Okay. Okay. So maybe it's better.
That's that's much better. Thank you.
Okay.
Please
So
continue.
Mr. Julius, the campaigner, create the relative strengths. Sorry. Okay. Let's skip. Okay. What I want to show is Mr. Julius, the campaigner, used actually two indicator, two relative strength indicator, the ratio and the momentum indicators. Yeah. So what he's showing us that the ratio is between an instrument to its benchmark. Yeah, the vertical line is neutral. If it moves to the right, it's leading, and if it moves to the left, it's lagging. And then momentum between an instrument to itself is in historical time. Give horizontal line as neutral, then move up is improving momentum, and move down is weakening momentum. And geniusly, Julius put these two indicators into one picture, and differently with what we used to do, yeah, with two indicators, yeah. So what we do in two indicators, each indicator is still visible, but in this chart, the relative rotation chart, the two indicators become one, yeah, and it put it as a rotation, yeah. So it is a rotation graph, yeah. Ichimoku, yeah, several lines indicator the Tenkan-sen, the Kijun-sen, the Chico span. Well, maybe the pronunciation is not a good one, but what I want to say that there is a lot of indicators put in one picture showing trend, momentum, support, resistance, to help us to get the idea, yeah, in one picture how the market is performing, yeah. So we can see the trend, where the trend is, where it's going, where is the support, and is it the momentum is supporting the price and else. Yeah. And then at below, this is stochastic, yeah. So Mr. George Lane create this indicator to give us momentum when it is oversold, when it is overbought, yeah. So we can anticipate what we will do with the market. But the problem is that stochastic indicator occasionally reverse, yeah, before reaching it oversold or overbought level, yeah. So how to fix it? Mr. Trevor Neil suggests us to use Bollinger Band, yeah, from Mr. Bollinger into the stochastic, and voila. Usually Bollinger Band is used for the price, but now Bollinger Band is used into the stochastic, yeah. So then we can see that we can have tools, yeah, that show us, alert us when the stochastic may reverse before it reaches the overbought, oversold, yeah. And this is very powerful, yeah. So this also tweaks something, yeah, from using Bollinger Band from the price, and then he switch it, we move it, and we use it Bollinger Band to the stochastic, yeah. So this is one tweaks, yeah. Okay, now Samuel Securitas dashboard, yeah. Yeah, this is where I work, yeah. So in this picture, we put all indicators, the trends, the momentum, the pivot level, the relative strength, all into one picture, yeah. There is tweaks in the formula, and we improve the performance, the presentation, yeah, to make easier to see the information, yeah, from all the indicators, yeah. And in the left upside, there is a price, yeah. In the real time, it moves and it shows where it is from the pivot, support, and resistance. And then there is a volume analysis with the volume weighted average price, and then there is a candlestick, yeah, intraday candlestick chart. And then below there is momentum, yeah, bull bears score, weak strength momentum, and trend for with several time frame, yeah, and also some smart money analysis, yeah, and at the bottom right is the relative strength in the market, yeah. So we can at any time we can switch stocks to see which is performing, and we can have instantly the market, yeah, condition of the stocks, yeah. So yeah, this is how we tweak formula and presentation, yeah, to help trader, yeah, to make decision, yeah. And this one is on-fin chart, yeah, from Mr. Fendi Susianto. I think he's he's between the audience now, yeah. So last time he don't want to speak, but I think his tools is interesting also to be presented here. So he used all his indicators to become a simple chart, yeah, a colored price chart, yeah. So the green candle chart indicator shows the instrument position that has the chance to strengthen, and the red candle chart indicator shows the instrument position that has a chance to weaken, yeah. And this chart has been used by Fendi for his high net worth investors from 2005 until now, yeah. And then Mr. Danditra, he names microscopic technical analysis, yeah. Mr. Danditra is 2011 Brown and Wood Memorial Awardee from IFTA, yeah. Well, he used stochastic indicator. Usually we use the percent K and percent D line. We use golden cross, dead cross, yeah, to give us signal for the market momentum, yeah. But then with this microscopic technical analysis, try to make it this indicator better, yeah. So actually, it is almost like make the histogram, yeah, where he calculate between the K and the percent K and percentage D. Then voila, he got alert buy signal and alert sell signal before the golden cross and dead cross. Yeah. Okay, Mr. Hendra Martono Liem, he will speak later in this conference. I just want to show how price trend, momentum, volume, relative strength in several time frame are put into only 3 pixels below the chart. Yeah, it's very simple that even a 6 years old investor can trade profitably. Yeah, he will explain this later to you all. Angelo Michael also will speak after me. His idea is how volume spike as a large demand power from smart investors, yeah, gives power or selling pressure, yeah, to keep a steady trend. So above this chart, this price chart, he put a chart showing volume spikes, yeah, so we can be alert, and then we can know that the trend is steady or support by the volume or not, yeah. So then we can be more confident, yeah, to get in the trend, yeah. And last but not least, StockBot, one of my colleague. Yeah, he make his apps in the gadget. Yeah, so in the right in the left in the right picture, his signal shows in the hand watch of the investors. So investors can trade easily wherever they are. Yeah. So that's another idea how to mix presentation. Yeah, how to tweak the indicators to make people see it easily. Yeah, use it easily. Yeah. So that's all from me. Thank you. The time now is for Mr. Soeratman Doearchman. Yeah. So Mr. Soeratman Doearchman actually is one of the most senior member of AATI, Asosiasi Analis Technical Indonesia. The time is yours, Mr. Soeratman.
Can I share the screen?
Yes.
Yes, please share your screen.
Yes.
Yeah.
It's already in the screen now, my presentations.
Yes, Mr. Ratman.
Yeah. Please go on.
Thank you very much, everybody. I introduce myself. I'm Soeratman Doearchman, 77 years old, and start trading at 63. And I never feel too old to trade. I'm now active as a trader, investor, and stock trading investing educator as well. And since 2005, have taught thousands of my students till now. Certified as a technical analyst from Indonesian Technical Analyst Association Indonesia. This presentation is for educational purpose only and not for buy and sell recommendations. Trading is risky business where you can lose a part of even whole of your money, which can lead you to a bankruptcy. Okay, in this opportunity, I want to introduce to you my system, which I call it's myFANTA, where FANTA itself stands for fundamental analysis and technical analysis. This system I create on my belief that the stock market index in the long run always making an uptrend move. You see here, always make an uptrend move. In between, it fluctuates. And considered as an opportunity for us as trader as well as investor. And profit only can occur when there is fluctuations. Also, the index in long run moves uptrend, buy and hold approach is not a good strategy, as we will lose opportunity from the volatility and fluctuations of the market. This opportunity not only good for trader, but also good for investor as well. Why? I include also the fundamental analysis in my FANTA system. I believe that trading or investing in stock with good fundamental is more safe compared to the penny stock with wild movement. Stock movement with good fundamental are more easy to follow. myFANTA also good for elderly as like me, because buy and hold for a long time is not suitable for them if they want to enjoy the result within their life, except they do it for their children or grandchildren. This system, I call it momentum investing, and let your money work for you and building your world. I love simplicity. That's why I create myFANTA using a very simple technical indicators. This can be learned by beginners. I create myFANTA who want to build worlds in the shorter time frame compared to buy and hold. In momentum investing, I only use combination of 3 moving average, which is moving average 50 on the weekly charts, then moving average 26, and moving average 9. The longest one looking at for whether the price is the grid sales. No, the longest one looking for whether the price in the grid sale or the rest of 2 looking for buy and sell signal. As easy as that. I repeat, the longest moving average is looking for whether the price in the grid sale, and the rest of the 2 looking average, moving average for buy and sell signal. As easy as that. The momentum investing is good for those who want to build their worlds through buy and hold and buy back approach as the alternative to buy and hold approach. Many of my students has learned the system. Look at this chart. Okay. The green area is I call it as a technically and fundamentally undervalued stocks. Stocks under weekly chart of 50 moving average are the candidate for my momentum investing, combined with the valuation criteria to find good margin of safety. Do the simple valuation homework through screening and always find stock this company has good fundamental. That's why this green area, I call it technically and fundamentally undervalued stocks, is here. And buy and sell signal, I only use 26 moving average and 9 moving average. By having or try to find golden and dead cross as a trigger. You see, we have the golden cross here, we have the dead cross here, and we have the again golden cross here and dead cross here and golden cross here. This is a very easy system to follow, even by those who just the beginners. Trader is not difficult, even for the short-term trader. Apart from this momentum investing, I have also the system, I call it the income producers momentum trading, which is suitable for those, I left this presentations. For me, buy and hold is not the option. You can see here, buy and hold, you have only the profit this long. But by having buy and hold and sell and buy again and hold again and sell again, your profit will be much higher than if you use buy and hold approach. So buy and hold approach is not an option. The other system that I have is for the income producers. This is for the short-term traders. Yeah, I only use the approach of Dow theory. Follow the trend, the price, discount, everything. That's why I just want to find where is the market is bullish, neutral, bearish. And these pictures tell 1,000 words to us when to buy and when to sell. Using the Ichimoku charts, this chart can show you where the market is bullish, where the market is neutral or sideways, and then where the market is bearish. Yeah. And by using the candlestick, you can know when to buy and when to sell, then the candlestick can tell. And I use also the volume indicator, the volume histogram as the energy. The volume is the steam of bullish or bear locomotive. And again, as the previous presenter show you that MACD is very powerful also indicator. I use MACD for avoiding being hurt by finding the divergence between price and MACD. And of course, the stochastic as a buy trigger. Work smarter, not harder. I am a golfer. Even while playing golf, he can trade. I have many advisors now, which are available in the fingers of my fingertips and real time by using available trading algorithm. This is also mentioned by Mr. Alfatih, several of them. My conclusion is trading is easy and not rocket science, but it can be disastrous. We propose, God dispose. The market might be against you. Now is the era of pandemic. The market very volatile. You have to prepare yourself to be a good trader by having yourself prepare very good. So I use the 3M approach introduced by Mr. Alexander Adler. As you know, in search of Holy Grail, I learned from many gurus. Some of them are the presenters of this conference. Mr. Guppy, Martin Prince, John Murphy, John Boringer, Alexander Adler, Van Trapp, Steve Nissen, Louis Bedford, as well as Tony Turner. But if your trading system 100% or very good, it is not good for you if you don't have if you don't have the money and risk management to protect your capital and your profit. This system, this approach, I use as my safety belt. Protect the capital and protect the profit. The money management risk and money and risk management, this is considered 2% and 60% rule, position size, stops, and margin of safety, which are learned from Mr. Guppy and Mr. Alexander Adler. And we have to manage the biggest of our enemy. It's ourselves, or it's you, to trade emotionally free, then discipline. Okay. Let's now. I want to introduce the next speaker. Allow me to introduce myself. Sorry. May I introduce the next speaker? The next speaker is beautiful woman trader, Miss Linda Lee. Linda Lee is a trader in Indonesian stock market for 11 years. She is the first and only Indonesian woman until now who has CFTE. She is a writer of 5 technical analysis books. Her favorite indicator is Fibonacci, and therefore she is known as the Fibo Princess. Miss Linda, the time is yours.
Thank you, Eyang.
Eyang. Okay, I stop.
Okay, good day everyone. My name is Indali from Indonesia and I will give a presentation about intraday technique price cluster analysis. Day trading strategies are essential when you are looking to capitalize on frequent and small price movements. The market always moves in trend. During an uptrend, focus on taking long positions. During a downtrend, focus on taking short positions. Intraday trends do not continue indefinitely. Trades can be made before a reversal occurs. Fully understanding the rules of intraday, which is price movements are more volatile and easier to be broken, should possess a necessity for traders to be alert in taking action. Before diving into intraday, it is most important that traders view the wider time frame. Combining the two is by looking where the price cluster resides. To understand the intraday price cluster, let's turn to how a spider weaves its web. When a spider weaves its web, it starts by creating the center, then moving outwards. Weaving one strand of spider silk to another makes it all interconnected. Starting from the smallest circle's outmost side, making its way weaving into the innermost web. Spiders weave web to trap its prey. Every silk strand is linked so strongly to one another that makes it impossible for a caught prey to escape. Price move as well, from the smallest time frame to the largest, and they are all interconnected. Every time frame is strongly connected. Hence, traders need to understand the use of grabbing opportunities given by the market. Price cluster is seeing and finding price connection formed from various time frames. I will be combining Fibonacci with pivot point in various time frames. Fibonacci retracement is created by taking two extreme points on a stock chart and dividing the vertical distance by the key Fibonacci ratios of 23.6%, 38.2%, 50%, 61.8%, and 100%. Once these levels are identified, horizontal lines are drawn and used to identify possible support and resistance levels. Of all the possible percentage retracement levels, the 38.2%, 50%, and 61.8% are the most significant and widely employed. These are very significant levels during market reversals, especially when trying to determine if a reversal is merely a secondary reaction or a full change in primary trend. A pivot point is an indicator used to determine the overall trend of the market over different time frames. It is defined as the typical price based on yesterday's high, low, and closing price. The pivot point is the average of the high, low, and closing price from the previous trading day. The pivot point is the basis for the indicator, but it also includes other support and resistance levels that are projected based on the pivot point calculation. All these levels help traders see where the price could experience support or resistance. To find significant level for market reversal, use Fibonacci retracement over a larger period of time. Fibonacci retracement measures the percentage from the present wave, while pivot points measure trend of the market from several time frames, such as daily, weekly, and monthly. A pivot point that overlaps with Fibonacci level becomes a stronger support or resistance levels. Like a spider web made to ensnare prey, so do traders use price cluster to to wait for the price to come and hit their trade setup. Price clustering is manifested in some prices being observed more frequently than others. These clusters may be either support or resistance, depending on whether the price is above or below the cluster. If the price is above it, we may see that we have a support cluster. Conversely, when price is below it, we may see that we have a resistance cluster. This is because clusters represent barriers to price action. Results from Fibonacci and pivot point measurements are static and remain at the same prices throughout the day. This means traders can use the levels to help plan out their trading in advance. Quoting Mike Delafiore, trading is not about being right. Trading is a game of math. It's about finding setups that offer you a good risk reward and pulling the trigger. Thank you. Moving on, we have my fellow technical analyst, Hendra Martono. He is the CEO and founder of Arahunter Quantitative Trading System with 23 years of experience in technical trading. Let's welcome Mr. Hendra Martono.
Okay. Good morning, everyone. Hello and welcome to the spectacular world of IFTA 2020. Today, I want to share about trend, volume, and momentum analysis with multiple time frames in a single indicator. In this case, everybody knows in 2020 is a very tough year. It is time when we all must fight for the COVID-19 global pandemic. But that is also the year when Timo is born. There are so many people losing their job because of the pandemic. However, I have created Timo so that people can still be productive by trading the stock market from home. Using Timo, we bring simplicity to the world of technical analysis and quantitative trading system. Two basic questions: what stock to buy, when to sell? So the answer is, you have to find the uptrend one, strong momentum, and big volume. The challenge, what kind of indicator that we use? What time frame that we use? So, Mr. Edman say, I have to pick bullish one, right? Piece of cake. I need one trend indicator, one momentum indicator, and one volume indicator that show bullish signal. Easy. Yeah. For instance, a trend indicator using MA or Arun. Yeah, momentum indicator, stochastic or trending momentum oscillator. Volume indicator using on balance volume or MFI. But wait, I also need three indicators in hourly, daily, and weekly time frame. Yeah. For instance, this is Apple hourly. Yeah, we are already in the momentum and trend and volume. And Apple daily and Apple weekly. If we put it all together, it's something like this. So Mr. Edmund say, if there are 1,000 stock, it means I have to find 100 stock times 3 indicator times 3 time frame times 3 pure neutral or pair, right? 27,000 calculation. Then Tom Cruise, is audience of Mission Impossible still open? No. So that's why I make the Timo. So actually, we know that there are 3 trends: bearish, neutral, and bullish. And I put it vertically, the pixel, hourly, daily, and weekly. So the first pixel is about volume indicator plus short term. And in the middle one, momentum and indicator plus medium term. And then the longest one, the lowest one, RSI indicator plus long-term trend. So when you find 3 dark green, you can buy. It's easy like that. And then you can find, if you find 3 red, you have to sell. As simple as that. So, for instance, this is a run. Yeah, we just see the pixel below. For instance, this time Google, you know that you don't know the price, right? But you can see the pixel over here, yeah, the pixel over here, and then buy in this dark green and sell in the dark red. Yeah, buy 1186, sell 1359 ROI 14.3. So that's why. But the question is how we can find that in a very short time. So I created a demo. You can find it in Google Play. Yeah, this instant link, the demo, trial. You can use the user ID Akela and password IFTA, valid until October 31st. And then this is how the system. Yeah, for instance, Apple 3 dark red, you buy, and you have to understand the stop loss is already there, the target is already there, and you can sell it when the 3 red pixel are already below the S2. So this is this example. Yeah, buy. ROI is 65.13%, and it takes only lower than 3 seconds to find that. And this is run, yeah, and the ROI is 211.5%. And then GKS, yeah, Jinko Solar 421.5, last price is 87.55, floating profit 248.6%. And this is also, you can use it in option. This is my friend Indah Nusantara, yeah, and also from Miyagio, yeah. And also, if you don't want to trade in daily, you can trade in 5 minutes. You can use it in 5-minute time frame. For instance, like this, Amazon. This is the last price I got this morning. And this is my friend Cahayarto. Yeah, he is the specialist in Amazon. Yeah, and using this one for Timo for using the better profit. And this is Neo. 3 dark green buy, 3 red sell, 3 dark green again buy again. And Mr. Pedro Cahyono have another 100% using Timo. And Tinago, yeah, by the Neo, now 640.4%. And Mrs. Prima, from 1,000 to more than 10,000, yeah, so the profit is 870.22%. And this is my friend Henry Chang, started 3,000 in 2018, and you know, from that one, 3,000 become 107K, and now become 200.5.4. So the question is like this: how can we find it? How can we find the? So in this case, for instance, you just only click the bull like this, or if you want to find the three green, you just find this one. So for instance, I want to find a stock from 50 to 1,000. So it's very easy. Only within 1 second, you can find it. And if you want to see, okay, let's say I want to buy this one, I want to check the chart. So you can click this one, and you can click the chart. For instance, this one, Garmin. So Garmin, if you want to trade on a Monday, you can choose this one as one of your stock pick. So when you see it, you see how much is the target? The target is this one, R1, 102.46, and then 104.05. So this is very simple. And then if you want to calculate how much money do you want, you just click the calculator. So it's very simple. Yeah, it's very simple. So you can, anytime you just want to, let's say, I want to, for instance, the market is bearish. And then you just can click here and you can find the Timo bear. So this is the, if you want to short sell. It's very, very easy. Just only 1 second you to find it. Okay. And if you want to have any information about Timo, or you can, maybe you want to contact me, you can click in stanlink./HML. So I will tell you about the Timo. Don't forget, you can download the Timo. And the next presentation, I will call Mr. Aria Santoso. He's a stock speculator, analyst, and educator. His approach is a simplicity to be applied in a practical way to assist the layman. Mr. Santoso,
thank you, Mr. Hendra Martono Liem. Can I share my screen?
Yes, please.
Okay, hello, dear fellow traders, technicians, and all audience around the world, across the globe. Good day. I'm Aria Santoso, here together with my colleague, Angelo, Michel. We are talking about market volume analysis to locate demand power and selling pressure. Let me show the basic philosophy about this thesis. As we have known, so many technical tools and indicators created to accommodate the needs of traders in the market. Some of them are used for trend following, measure momentum, and even the volatility. I tried to mix all of them in one chart. When I put all of them overlaid in price chart, it really looks complicated. I realized what I need is to decide faster whether I should buy, sell, or just wait. To be simple, it is about how to write the price movement in trending period. The idea is to recognize where the crowd goes, the flow of capital, the right place where the attention focus on. By this idea, after many years of the long research, then we ignore the fancy indicators. They would become obsolete for us because we choose to focus on the price and volume only. The appearance of the chart is now clean and simple. We make it easier for the users to understand the market. When exactly the demand power dominates the transactions or the selling pressures does. It is simply like an analog marking to show a sign, a simple sign about the emotional feel or about the conclusion what is happening in the market. This is the idea to help us growing our portfolio in trading, to write the market, to locate the demand power and the selling pressure, to decide clearly when to buy and sell. The details of this idea will be presented by Angelo Michel. He is a trader in the stock markets for over 23 years. He is using technical analysis. His favorite interest is volume analysis. He uses it to read smart money and develop algorithmic trading systems. Welcome, Mr. Angelo Michel.
Thank you.
Okay, sir. Please continue.
Hello, everybody. Please allow me to follow up Aria's presentation. Generally, when using candlestick chart, a candle tells us about the current supply and demand during the lifespan of the candle. If the candle increases in price, then demand was higher than supply. If the candle decreases in price, then it means that during that time, supply was much higher than demand. But there is a problem. when there are some significant contradictions in the real chart. It is quite often that we see a large white candle with a large volume does not represent large demand, since the days after that the prices are falling down. So I tried to make a little adjustment in the concept that will make me late for one or more candle, but more confirmed. In this slide, generally we accept that candle B show higher demand than supply since they are hollow candles. But I am very sure that candle A, whether they are filled or hollow, show higher demand than supply, so significantly that the next candles are still going up. I like to call the candle A's are the location of demand powers. The same thing will apply for finding the supply. I am very sure that the candle A, whether they are filled or hollow, show higher supply than demand so significantly that the next candles are still going down. And I like to call the candle A are the location of selling pressure. So in these four cases, along with the previous slide, I am late for one candle, but it is more confirmed. I can be late for one candle or several candles. As we can see from the right slide, I am late for 5 candles to confirm the demand power is at candle A. One more thing, and this is the most important one in this method. I want the demand power or selling pressure at the candle with most significant in strength. So I have to pick the ones that have significant size of volume. We may see it as volume spikes. In this slide, we recognize the demand power with the blue volume confirmed by candle A that breaks above the high of candle A. In this slide, we recognize the selling pressure with the red volume confirmed by candle B that breaks below the low of candle A. So this is how I locate demand power and selling pressure in charts. So my variables are the volume spikes, candle A's and B's in order to locate demand power and selling pressures. So every time I found a volume spike, I can identify it as demand power when there is a break above the high of the candle with volume spike. The high of the candle is considered as a strong resistance. Another volume spike, then it is a selling pressure since the price breaks below the low of the candle with volume spike. The low of the candle is considered a strong support. You can see the same volume whose color was red becomes blue to represent demand power because it must be stronger than the selling pressure when the price breaks above the high of the candle with volume spike as a strong resistance, and so on. So, if I make a line indicator to represent the confirmation of demand power and selling pressure with just 2 directions, up is for the confirmation of demand power and down is for the confirmation of selling pressure, the display will be as follows. When the price breaks above the high candle with the volume spike as a strong resistance, the line indicator will go up with the same distance with the size of the confirmed demand power volume. When the price breaks below the low candle with the volume spike as a strong support, the line indicator will go down with the same distance with the size of the confirmed selling pressure volume. When the price breaks above the strong resistance, the line indicator will go up. When the price breaks below the strong support, the line indicator will go down. If I search volume spikes with a constant period continuously, I can get better volume spike more relevant with its surrounding. I've made several experiments and found that the periods of 5 days, 10 days, 20 days, and the longest 60 days could make a clearer path of the price trends, whether short or long. So, for every breaks above resistance is an indication of initial uptrend. For every breaks below support is an indication of initial downtrend. Here are some sample of Facebook with 4 indicators and the candle charts. The blue candles for the uptrend and the red for downtrend. With a little makeup, with an application, we can see the trend much better. This is Tesla on October the 20th. With some additional oversold signals, we can have better trading strategies. This is Snap Inc. As long as the demand power is still higher than selling pressure, oversold signals will be very profitable for bottom fishing strategies. This is very interesting for me. While moving average is a result of counting every candle to determine trend, this method is only using 2 candles and 1 big volume to determine trend. I ignore all small volumes since they have no significant influence to the price movements. And I was often surprised when finding that trend reversal is earlier and with less false signals than moving average, as you can see in this DraftKings stock in this slide. As you can see, this is very simple, yet quite good for trading strategies. And I'd like to close my presentation with my favorite quotes as displayed. We can't always forecast, but we can always anticipate. You can also try my method in Android application. This app should work outside of Indonesia. This method is also available as an add-on for the application that I used for the previous slides, if you notice. Next, let's pay attention to Indrawijaya. He is an independent financial trader and analyst for more than 10 years. He is inspired by WD GAN method and technique and simplified it for analysis and trading. Please, Mr. Indra.
Thank you, Mr. Angelo. Okay, good day to everyone. I'm Hendra from Indonesia. Gambarnya ada?
Ada.
Okay. Today I'm going to talking about market mood, place, time, and synchronized. Before we talking about the market mood, I'll talk a little bit about the Forex or the Forex exchange. Why Forex? As we know lately, this industry is growing rapidly, so everyone can trade easily by online, everywhere, and anytime. And here's some fact about Forex. It has enormous turnover, also has a trading session, and it's open 24 hours. And here's some data that's showing that market volume and participation that's increasing rapidly every single year. So when we're talking about high turnover, that means high volatility. And when we have high volatility, it's very good to be traded. If you never seen or heard about the currency or Forex before, here's some abbreviation that I'll show you. Some of the currency that can be traded and some currency can be pairing it. Okay. And now we move on to the market players. As we know in the market, there are 2 types of market players. One is the market maker, as we can see here. And the second one is the retail sport market trader, the tiny little circle one. Why they're small? Because they are not the market makers, they are just followers. So probably, now from our research analysis, we see some difficulty without them knowing it, that the retail spot market trader, they have lack of access volume transaction information in the spot market, lack of knowledge to maximizing the intermarket analysis or currency pair correlation, and last one, lack of sources to detect the volatility of pair correlation in the spot market. So we have an idea to solve this problem, difficulty, the idea is we create a system called market mood. And what is market mood? Is an intelligent software that calculates all the price data and volume tick in real time and divides the strongest and the weakest currency pair that presented in a multi-time frame. And how it looks like this. It's a dashboard. As we can see, there are 3 columns in here. Column 1 is money flow, and column 2 is a rank, and column 3 is a strength movement index. The column 1 is showing the grouping of the pair. This picture showing the pair of the forex and the time frame. It started from 1 minute into 30 minutes. Actually, 1 month. Right? And this picture is showing the rank from the strongest to the weakest pair of the currency. And last one is the strength and movement index. In here is showing the color of the number. Red is for the bearish pair and green is for the bullish pair. In this picture, it's showing nothing, no volatility, no movement. So we don't waste our time and energy to jump into this market with this condition. Why? No light, no volatility. Or we can say, no disco light, no dancing. Okay? And what happened with this picture? In here is showing the pair of euro is weakened from the time frame 1 minute into 1 hour. So what we have to do with this condition? For sure, I will sell euro and I will buy US dollar. Boom, the market drops. Another example is for Japanese yen. It's the weaken of the Japanese yen from time frame 1 minute into 1 hour. And as we can see here, the pair of Aussie yen, Loonie yen, Euro yen, Kiwi yen, and USD yen. And for this time, I'll pick to buy USD and sell yen. And boom, the market goes up. Another example in pound sterling. And here, another example with 2 pair currency with the same condition. As we can see, the euro is strengthened and Swiss franc is strengthened. Can we do this trade in the same time? Yes, we can. As we can see, the euros go up and USD Swiss franc is going down. So if you ask me how much can we gain from this system or this method, approximately we can gain 20 to 30 pips in just 1 hour. All right, so finally, the idea of the market mood is to avoid this condition. I believe this is one of the very common mistaken that every single or rookie trader or maybe experienced trader still doing this. And also I've been there. So as our motto, with this market mood, we don't predict, we just follow. Thank you for your attention. Moderator?
Okay, thank you. Thank you, Indonesia Power Hour. We regret that we cannot do the Q&A because the time limit. So I would like to hand over this session to the next session, the European session. Please, Vilan. Vilan?
I muted my microphone by myself. So, anyway,
Okay.
Thank you, Gideon. Thank all of the speakers of the Power Hour team. Thank all of the Australian and Asian speakers. So, yeah, we are almost done with 1/3, and I hand over immediately to my dear colleague, Mohammed.
Thank you, Wieland. Of course, this is our second opening session. Good morning to Europe, Africa, and the Middle East. I welcome you to the 33rd Annual IFTA Conference. As you all know, this is our first online IFTA conference. I'm very honored and pleased to be part of this welcoming committee. My name is Mohammed El Saeed. I am the former IFTA president. I would like to thank you all for attending this conference, which is something that was very important for us to plan and organize this year, especially during these circumstances. It was something that we thought very vital to the IFTA community, to the societies and the members, something that would provide added value, especially during these turbulent times and these volatile times in the financial markets, with such amazing speakers and topics in the agenda. I would also like to present my colleague, who is the conference director this year, who took this role about 6 or 7 months ago, Wieland Arlet, and who's also assumed the role of the IFTA president recently. And I would also like to express my support and wish him all the best from myself and the IFTA board of directors. And now I hand over the mic to Wieland. Please go ahead, Wieland.
Thank you, Mohammed. Thank you very much for your introduction. And of course, dear IFTA colleagues and friends, I like to welcome you to the European, African, Arabian session, so Middle East session. And well, we all experience that this year is a very, very special one. Not only that we face with the pandemic, a never foreseen worldwide crisis. Most of us are also forced to change the habits of life and work in a very rapid way, right? So what we had previously taken for granted became impossible, and what had previously seemed impossible became self-evident. In life, and as traders, we know this as well, and markets, things change. So change is constant. Everything that was and is familiar to us up to now has been shaken up. This applies, of course, in particular to the way we come together. For the last 32 years, the IFTA conference is hosted by the Association of Technical Analysts this year. The IFTA conference is hosted by the Association of Technical Analysts in Germany, yet it does not take place in Germany. It is worldwide, hosted in a digital virtual space. And what suits us better as a federation where market technicians from around the world speak the same language than an online conference? Therefore, I'm more than happy to welcome all of you to this very first online conference, and this conference is special in many ways. Not only do we present in this conference the most renowned experts of technical analysis, investing and trading our industry has to offer, like Linda Rushke, Dr. Van Saab, John Bollinger, Larry Williams, and of course, who's following next, Dr. Gregor Bauer. We also offer experts from around the world. We also cover in our next session our panel discussion today with today's most discussed topic, together with Linda Rushke, Larry Williams again, Raoul Glaman, Adrian Kömel, and Tobias Berlin, the rise of artificial intelligence in the financial markets. Surely the world is changing, and so are we. So I'd like to take the opportunity also to thank my dear colleague and IFTA's former president, Mohammed El Said, for his successful presidency, in which he built the foundation on which IFTA can follow the covered path into the future. And I also like to thank the conference committee, all supporters, all hosts, co-hosts, moderators, and sponsors for supporting, as well as the speakers, of course, for supporting technical analysis and IFTA. Without all of you, this conference wouldn't be possible and never be as successful as it is right now. So now I hope that you will all enjoy the conference, this year. And I also take this as a good entry to introduce you to Dr. Gregor Bauer. Dr. Gregor Bauer is our chair in Germany of the VTAD, of the Association of Technical Analysts in Germany. He is in the capital markets for around 20 years. He's written 2 books on technical analysis, and he's a regular board member of the IFTA for years. And so therefore, I'm very honored, very proud to present Dr. Gregor Bauer to you and to the IFTA world. Gregor, you're welcome to the conference. Great to have you here.
Yes, Willan, thank you very much. And can you give me a bit of feedback? Is my sound good? Can you hear me well?
It's perfect, Gregor.
Okay, thank you very much. So I will just share my